We're very excited to have the pleasure of speaking with Anne Aden, her along with her sister Pamela, two of the most influential and well-known investment analysts, writers, and lecturers in the world. They are co-editors and publishers of the Aden Forecast. It's a monthly investment newsletter which specializes in the U.S. and global stock markets, the precious metals and foreign exchange markets, as well as U.S. and international interest rates and bonds. They've done tons of articles and writing dozens of articles. I've been at seminars around the world, done a bunch of TV as well.
And we're glad to have with us today Anne Aden.
Well, that's very nice to hear, and thank you very much.
Excellent. So I'll start with question number one. We've discussed cycles on our show, The Real Money Show, since 2008, and since we've been on air, and how silver and gold have really been cyclical since the beginning of this bull market back in 2002. My question to you is, how would you explain the most recent correction of the gold price since 2011? What factors have played a role in getting us to where we are?
Well, you're very right in saying that gold has been quite cyclical. It always has been. In fact, we've been able to identify a cycle that goes back to the very beginning, ever since gold began trading in the free market in the early 70s, which is kind of an intermediate type cycle because, of course, there are long-term cycles, shorter term. And the one that you're talking about, since gold began to decline, what was abnormal about that cycle was how far it fell. It was something that I know we weren't expecting, and I don't think that many other people were either, but gold was expected to decline cyclically, but then it kind of went down that extra $100 or so that kind of surprised everyone. And so then we took a harder look at that, and basically what we believe, but again, time will tell, is that if you look at go all the way back to the big bull market in the 1970s, gold had a super rise, then it had a big mid-correction, kind of midway. At that time, it lost like 50% of its value, and then it went on to like a second bull market, if you will, that was just as strong, actually stronger than the first one. So it was two bull markets interrupted by this big downward correction, and we're beginning to suspect there's a lot of similarities to the decline that we've seen since in the last couple years to that intermediate decline that happened in the 1970s. So it's quite possible, again, time will tell, but that perhaps the big bull market we've seen since 2000 and say 2001, 2002, this was like a correction, and then it's going to continue into an ongoing, stronger bull market. But like I say, we'll see. We have to kind of just take it one step at a time. But for now, it's actually looking very good.
Sure. I mean, we tend to think the same thing. And when watching the markets more recently, I certainly see where a lot of people could have lost faith. And of course, sentiment tells us that they have. Certainly the small investor has lost faith. But when I was reading a couple of weeks ago an article that I believe you and your sister penned called Gold Finally Bombed Out, you were discussing the appeal of gold as a safe haven very briefly in the article. And I'm curious to know what your thoughts are on gold as it relates to geopolitical instability the world over, and what role this instability, if any, whether it's the Middle East, Ukraine, or other regions, might play in terms of gold pricing moving forward from here.
Oh, that's very, very important because gold has always been a safe haven, sometimes more than other times, but it has that reputation, if you will. And we've seen in recent weeks what's happened in Iraq, for example, was a very important factor in pushing gold up strongly a few weeks ago. And we think that's going to continue. The same in Ukraine, as things have kind of simmered down a little bit here recently, but it's an ongoing, kind of a geopolitical hotspot. And then there's always we always say to watch out for the wild cards because this ISIS insurgency, for example, in Iraq. Just a month ago or so, very few people had even heard of ISIS. And all of a sudden, from out of the blue, at least for those of us who don't live in the Middle East, here they come, and they conquered a big part of the country, and they're very well financed, very well organized, something that just kind of came seemingly from out of the blue. And that's something that really spooks investors, and it makes stocks nervous, generally speaking, and it therefore drives more people into a safe haven like gold, for example.
I mean, it's very timely in a sense, because in that same article, you actually pointed out that you feel technically we may have witnessed the bottom in the gold market price. Now, obviously, we don't have a crystal ball, but the recent pricing tends to us to indicate a willingness for the market to move forward at this point. In the last few days in particular, although our good friends, the banksters, seem to be poking around, and of course, we look at the CO2 reports here and we follow them. But, nonetheless, we do believe that there is enough evidence to suggest that we be at least cautiously optimistic about the price going up from here. Is that your same feeling?
Yes, it is. It sure looks like it, and there's several reasons why. One being this, the environment, if you will, the with the geopolitical tensions, the safe haven, the fact that gold got so. You mentioned that people just got so kind of burnt out on it. They didn't want anything to do with it. Very, very bearish sentiment. And with reason, stocks have been doing quite well, and now bonds are too. So people just kind of pushed gold aside. And that's exactly the kind of sentiment you want to see at a bottom. But that aside, technically, if you look at, we have a lot of charts we use and leading indicators and what have you. Gold got as bombed out just recently, let's say in the last month or two, it got as bombed out as it was in the 80s. And so it's before, like even before that, actually, the 80s, it was bombed out, but not. Right. But this indicator, it hasn't been as low as it's been in something like 30-some years. It was amazingly bombed out. Then all of a sudden it's been spiking up. That tends to lead the price movement, and sure enough, now we're seeing the price movement looking a lot healthier. And we use, for example, one of the moving averages we've used over the years. It's not absolutely foolproof, but it's the 65-week moving average. It's right now just below $1,320. Just this week, gold has surged above the $1,320 level. And if it stays there, that would be a confirmation from a technical perspective that a bull market is indeed underway. And so we're very positive, and we're seeing that also. It's being reinforced in the gold shares, which were very, very weak, as you know, and we're seeing it in silver, and we're seeing it in some of the other metals. So we are seeing quite a few signs signaling that this is it, and it'll probably keep going up from here.
And if we got, let's say, another run similar to what we saw in 2011, 2010 coming into 2011, what would be your opinion as to where gold prices might head? What range would we be looking at possibly?
Well, that's hard because basically there's some heavy resistance levels along the way. One is $1,420. That's, we're about $100 away from that. If that's broken, on the upside, obviously, then there's a good chance that gold after that, it's kind of, clear skies ahead, and it has a very good chance of running up to its old high.
It's interesting. It's interesting to see it too, because I don't think a lot of people spend much time looking at the charts as we might. But I too also wrote about that this week in our Precious Metals Advisor, and the fact that 1420 could be a very interesting area. And if it does break above it, I'm interested to see where it goes. Now, also on a geopolitical front, in addition to what's happening with different situations and hotspots, there is seemingly this undertone of discussions occurring, and certainly some activity brewing regarding the possibility of countries moving away from the U.S. dollar. Is this a sign of things to come, and would this lead to any type of price fluctuation in gold and silver if major countries really did start to refuse the U.S. dollar?
Oh, it sure would. It would be huge. And that's something we've been watching, too, for many years. And, in fact, sometimes we think our subscribers get bored hearing about it, so we don't, beat a dead horse, so to speak. But it's every month just about you see more and more countries that are doing their own thing. And by that I mean trading in each other's currencies, thereby eliminating the U.S. dollar from the transaction, which was always the case before. And so slowly but surely, and it's nothing that you could just say, oh, gee, this happened last week, but very slowly but surely the dollar is indeed losing its global reserve status. And if you look at a long-term picture of the dollar, which I'm sure you have many times, it's been on a steady decline since 1971, 72, when it went off the gold standard. But it's been subtle, slowly but surely heading down. But I think this is going to speed up as we see more and more countries, in a polite way, but essentially abandoning the dollar in their transactions and in they're finding it less attractive. And as you know, as the dollar heads down, gold will go up. And so that's a very bullish factor, yet another one for gold.
It is, and technically it's hard to follow this trend, certainly because the data that's out there is not significant enough to come mainstream. So it's hard to dig up those little corners of the world and find these tidbits, but I suppose nobody really wants to be the first. Now, when it comes to the U.S. in particular, we have made an extra special effort on our show in particular over the last number of years, and in my writing also, to highlight the necessity for them to misdirect their public. And keeping the headlines pro-economy is certainly something that they've done a good job at in the last few years. It feels as though the U.S. and to a great extent the global economy is, however, behind the scenes becoming increasingly unstable. What is your take on the real situation of the U.S. economy, and what, if any, impact will it have long-term on gold and silver pricings? I mean, are investors really waking up at this point? And if another crisis were to ensue, would they be smart enough to hedge their investments?
Well, that's a very interesting question because, as you know, I'm sure, anybody that is, reading the financial press, there's always predictions of crisis and disaster ahead, yet it hasn't happened. On the contrary, things are kind of chugging along, I won't say just fine because, as you said, there's a lot of problems behind the scenes, and it's certainly not perfect, but it's okay. And it's okay enough to drive stocks sharply higher. Consumer confidence is coming back. And this is also not just in the U.S., but globally. So, yes, debt is at sky-high levels. And yes, there's a lot of problems. And yes, the GDP was just revised down to nearly a 3% decline in the U.S. There's all this stuff going on, yet on the surface, things are working, and I think that's primarily thanks to the Fed and their stimulus, which doesn't mean I think it's a great idea, but I think the option of not doing it would have been 10 times worse. So, call it fake, if you will. I don't know.
Sure.
But it's working. Now, is that going to work forever? Obviously, no. But we're not of the school that's saying, oh, gee, there's going to be a big collapse in the next year or two. We don't know. We just I don't think any of us really know. I think things have gone better longer than most people expected, and that's actually good. I don't see, what's to complain about right now as far as, yes, long-term, of course there is. But to say when is this going to happen and how it's going to affect gold, it certainly will. But to put a timeline on it, that's kind of tough.
I think that you're right about that. And my greatest fear, certainly in Canada, and I don't know how well-versed you are with our economy in particular, but I'm sure you know enough to understand that we suffer some of the long-term potential downside problems that the U.S. does as well. And,
certainly, yes.
We've been viewed as an economy that's actually pulled through this crisis fairly unscathed. So it does leave me with a great deal of concern, but I doubt very much that the mainstream investor is going to be able to turn the corner quick enough if a crisis does ensue. So we are certainly making every effort to attempt to get people into our markets, which are the physical gold, physical silver markets, and we believe it's a good place to be parked. Now, in addition to gold, of course, we're huge fans of silver. We have followed silver since day one, and to a great extent, we've helped a lot of investors get into silver as opposed to gold in some cases because they're speculating, in other cases because we believe in the how undervalued silver is and what its potential is long term. In your articles more recently, you also have mentioned that you feel silver is very cheap at this point in time. What are the differences between the mentality of the gold investor and those that might be venturing into silver? And what do you feel might be the upside potential of silver?
Well, silver, we think it's just fantastic. and really, when I really do mean gold and silver, I mean, I should have been more specific there. But no, silver is super undervalued, historically speaking. During bull markets, which we think this could be the beginning of one, we're almost, you can never say you're certain, but we're pretty sure. And silver will continue to look very good, very positive by staying above $21. And it's got way more kind of, it's like someone had once said silver is like gold on steroids. It's like if gold's going up, silver's going to go up much further. And that's usually what happens in bull markets. And silver has excellent potential. It's actually more attractive for a lot of people simply for the fact that it's so much cheaper to buy, yet you get the benefit of a good, solid, safe investment. A secure, safe haven, so to speak, probably easier to dispose of and just easier to manage. But it's also, it has its industrial uses, as you know. And we're very, very bullish on silver. In fact, we think it will outperform gold once this thing gets moving.
Well, it's certainly a viewpoint that's not shared as much as it should be, and we certainly do appreciate the fact that you also like silver. But in terms of the marketplace itself, we look at silver, and it's interesting to point this out. It's a metal which certainly has many of the same practical, fundamental reasons to invest in as gold does, but if, let's say, for example, the economy tomorrow turned around and the largest economy in the world, the U.S. economy, turned around and pulled itself out of this huge funk and everything was great and we saw long-term debt coming down, I believe that because of the industrial uses of silver, that this is a metal that could soar equally in that type of environment as opposed to what people might be using it for now, which is as a safe haven.
Oh, absolutely. Absolutely, and really, you don't even need the U.S. economy to pull out as much as just the global economy. China, everybody wants silver, needs silver, and so it's got that going for it too, which is a real plus, I think.
Well, again, when it comes to investments with Guildhall, I mean, obviously, there are a multitude of ways one can participate in the bullion market. Certainly, paper is probably the biggest and certainly right now the most popular. But we have always believed in physical products since day one, and that has been what we've predicated our basic business model on. What is your thoughts about holding physical bullion? We tend to believe that it should be titled in serial numbers, and you should be going the extra mile to make sure that it's physical. We offer storage for our clients. It doesn't mean they have to use it, but what are your thoughts if you were going to get into the physical bullion market about holding it at home versus maybe storing it? And I'd be interested to know, and please don't pull any punches.
Well, okay. Well, what you have just described is really the very safest way to own the metals is to, the physical, have it, it's just there's nothing better. I mean, sure you can buy and we do recommend some of the paper trades,
sure,
CLD
sure,
and what have you, but that's mainly for ease, but for security, for the long haul, physical gold and silver is the only way to go. And it's up to the individual if they feel comfortable. Some people don't want to worry about having it in their home, that someone might steal it or they might, forget where they put it or whatever. We've heard a million reasons. But then other people don't feel comfortable storing it because then you have to trust a third party. So it's really up to the individual, but I think if you find a good solid company that you're comfortable with, and it's very practical to have it stored and have it registered in your titled ownership, as you say, and that's a wonderful way to keep your own gold and silver.
Right. And just so our listeners can be a little more familiar, yourself and your sister Pamela have been doing this a long time. Can you give us a little bit of background on both of you and how you came about and how long you've been doing this for?
Well, we've been doing it for over 30 years, and it's really funny because we kind of stumbled into it because we both had a kind of business educations, and at the time we were living in California, and our mother had moved to Costa Rica, and so we just came down for a visit, and we really liked it, and we thought, well, we'll just stay thought we'd stay for a year. But during that year, but with every intention of going back to our work and what we were doing in California, which was fine. We didn't come for any other reason other than to visit our mother. And so, but once we were here, it was exciting, and we thought, well, maybe we'll work. And so through a mutual friend, we met a private investor who was very much kind of a Howard Hughes type of recluse, which we weren't quite aware of when we met him, but he had retired at something like age 33, and he had 2 degrees from MIT in engineering, and in those days there were, barely computers were coming on board. We did a lot of our studies, just the old-fashioned mathematical calculation way, and we went to work for him. And so that's where we initially got kind of like this private education with him. And then after obviously ended up staying in Costa Rica. To make a long story short, we went to work after that for the only brokerage company in San Jose, which is the capital, and then eventually started our own newsletter because people kept asking us how they could keep up with what we were doing and this and that. So we've had our newsletter for a little over 30 years, and we just love what we do, and we follow the markets every day, and that's basically how it happened.
That's a fantastic story. How can our listeners get in touch with the Aden sisters?
Well, we have, they can come to our website if they like, and they can see some samples of our newsletter, and it's at www.adenforecast.com. And the information is there, and samples and what have you, and so that would be probably the easiest way to get a hold of us.
Well, thank you for being a part of the Real Money Show, and we hope to have you back soon. Take care.